everyone, myself Vaibhav. In today's session of Visual JForex, I will be continuing to demonstrate how to design and develop the algorithm using the indicator block Stochastic Relative Strength Index, Stochastic RSI. This is the second part, and in today's session, the focus is going to be on the buy side of the equation. So now let us go to the Visual JForex board, which has been developed by the Dukascopy Bank SA. This is the setup so far. The instrument subscription was done. This time around, the USD JPY is being used. Position amount was defined at 0. Then I got these stochastic RSI blocks. These three are of 4 hourly time periods, and the only difference is this shift value. This has 1, another is 2, and third is 3. Moving on to the price action, we are also relying on these cluster of 4 candles of 4 hours, and we will utilize these to define the entry point. We will also see if there is enough of volatility or not. Loop viewer is to retrieve the visual variables from this array of data, and after that this get historical candle of 4 hours will help us define the conditions whatever way we want, depending on how the price action has played out in last 4 hours. And to pinpoint the exact entry point, these 10-second blocks of get historical candle will be utilized. And on the lower side, this calculation was carried out. This has been done to define 10 pips. And as I had explained to you, 10 pips is going to be the value which will be added or subtracted from the highest or the lowest value. So I will give you the explanation on the chart. That will be much easier to understand. I hope you remember the logic for the trade to execute, and I will give you a refresher of what the conditions need to be for the buy trade to execute. We want that in the last 4 hours, the underlying instrument has having spent considerable amount of time in oversold territory is looking to rise, and for that we are relying on these stochastic RSI values. We will be considering the stochastic fast percent K and fast percent D values, and in last 4 hours these values should be above 0, both the values, and of course the fast percent K should be above fast percent D. And in 2 4 hour blocks prior to that, these values should be stuck at 0, exactly at 0. And for that we are taking 2 more stochastic RSI blocks with the shift value of 2 and 3, and there we will need these fast percent K and fast percent D values at 0 for both the blocks. And as and when we see this buying momentum picking up, we will be looking to place the buy order, and that buy order is going to be above the 10 pips from the lowest of the cluster of 4 hourly candles. So we will be looking at the 16-hour data, and whatever is the lowest point of those 16 hours, we will add 10 pips to it, and that will be the entry point. As and when the price starts to rise from that point, we will be executing the buy trade, which is going to be the market open. So the requirement is fairly simple, and it won't be much difficult to define either. Now we head back to the platform, and here one more calculation block will be needed for the time being. I will have to take this FHLC's lowest value, the candle low, and add 10 pips to it, and that will be the entry point. So here comes the calculation expression. And 10 pips we have already defined. Okay, this TPD is the variable having value of 10, and that has been multiplied by this default instrument pip size. We need to simply add these 10 pips to the candle low. So A1 plus A2, and this will be the price for the execution of the buy trade by entry BE. Okay, we will compare this with the closing values of this candle 20 and candle 21. Now coming back to the defining of the conditions using the if blocks. First I will need to take a couple of if blocks. In last 4 hours, this both the values should start to rise, and first thing will be fast K11 should be above fast D11, first input greater than second input. Then both these values will need to be above 0. We are not capping any price on the higher side, but on the lower side it should be above 0. First input greater than second input. Again, first input greater than second input. After that, we are going to need 4 more if blocks to define the conditions for these two stochastic blocks. Fast K15 and fast D15 should be exactly at 0. Same thing will be needed for fast K16 and fast D16. So all these 4 variables should be at 0. So in one go, we will place these variables. Okay, and second variable is going to be the same 0. First input equals second input. Same condition for all these 4 blocks. And after that, we will consider the price action. Last 4 hours should have 4 hourly candle should have its closing value below the opening value. No, not below, above. The closing value should be above the opening value. That means there was price rise. So we need to consider the candle 18 closing and opening value. Candle 18 is last 4 hourly candle. So this first input greater than second input. Okay. All right. Now all we need is to compare the price point with the closing values of last two 10-second candles, and after that it is going to be the trade command block, and it is going to be at market price. Candle 20 and candle 21's closing needs to be compared with BEE, and candle 20 has the look back rate of 1. That means its closing should have been above the buy entry point, and candle 21, which has the shift value of 2, it should have closed lower than BE. First input greater than second input. Now this is going to be the last. So we will join this to the trade command block. Here, candle 21's closing value needs to be added, and it should have closed lower. So first input less than second input. Okay. And after that, first input greater than second input. And then we have to define these input values, input parameters, depending on which the characteristics of the trade will be defined: the trade amount, slippage, stop loss, and the take profit. Before we do that, just let us get these blocks in order so it becomes easier to understand the trade flow. Logical block is needed, multiple action. Here it is. For the time being, I will join it here, but when we will be defining the conditions for the sale trade, we will have to disconnect it. We have needed 10 blocks to define these conditions for the entry, and I will join this first one to the multiple action. And now coming to these input parameters. Default instrument is going to be USD JPY, trade amount to be defined as per the equity of the account. Slippage I will change to 2 pips. Stop loss is going to be 15 pips, and take profit of 30 pips. So we will get the risk reward ratio of 1:2. Alright, so we have now defined all these 5 input parameters for the trade, and these are the conditions. the first day 11 and first day 11 are compared, then both these values needs to be above zero. Then these values of the prior stochastic RSI blocks are being compared with zero, and it should be constant at zero. So all these values need to be equal to zero, and then we consider this price action data. The last 4 hourly candles closing should be higher than its opening value. That means the price went up in last 4 hours, and whenever we have the price moving above the 10 pips from the lowest point, we will be placing the order to buy. So that's how this trade setup, this algorithm is going to work. And with this, the time is also running out. So that's it for today's session. In next session, the sell side of the equation will need to be completed, and only after that, the algorithm will be complete. And once it is complete, you can test it on the historical data on the JForex platform and see whether it is profitable or not. And if it is profitable, well and good. If not, then you can always try to tweak the conditions, the logic to make it profitable, to make it workable. See you next time, and do subscribe to the Dukascopy webinar channel. Thank you all for joining in. Goodbye.